I'm looking at rent prices going up like crazy. And even like you were saying with Scottsdale and how much over the past couple of years, like it's just exploded in terms of like what the pricing is for rents. And just like home prices, people say, well, we got to be in a bubble here, and like, when is everything going down? And the fact is it's not going down. And the rent prices are going to continue to go up too. We'll see, I think we'll see rent prices appreciate more than you're going to see home prices appreciate next year. But it's just based on pricing, because if I buy, let's say that you buy a home, it's $500,000, okay? And you sell that home 2 years later and you sell it for $650,000. Well, you have to, it's called cap, right? It's your rate of return on what you paid for the investment. What's my cap rate? You'll hear that all the time. Just like in commercial, when I buy a building, what is my return on the building versus the money I spend versus the money I take in after all expenses? What does that equate to? And that's what people look at in rents. And so when you look at whether it be hedge funds buying a bunch of rentals, whether it be investors buying rentals, they have to make a return on their money. And in order to make that return on their money, they then have to charge more rents. And as rents start to get charged more, now the rent population in that specific marketplace is accustomed to paying fair market rents, which are now, this year, 22% higher than they were last year. And I think next year you'll see like another 15% in that. And so the problem is when you consider that, the way to always equate this is if you can buy, it's always better now than later. When people ask the question, is the market going to crash? The answer is, even if it does crash, which it's not, but even if it does, you still have to live somewhere. And so if you're spending, say, $2,000 a month on your rent, and next year, now you're going to spend, if it's 15% appreciation, it's going to be $2,300. And say it's 10% after that, now it's $2,500. So in 2 years, you go from $2,000 to $2,500, right? But that $24,000 a year that you just throw away in rent by paying someone else's mortgage, or now $2,300 a month, now $2,500 a month, which is $30,000. While you're doing that, the opposite effect for the home that you bought is occurring, and now I'm paying down principal for savings. My payment doesn't change because I'm locked into a 30-year fixed loan. It never changes. So inflation with rents is where people get crushed, because inflation in rents allow you to never, ever, ever be able to have the same payment that you would years and years down the road. It will always go up. I mean, tell me the last time that your landlord called you and said, hey, that $2,000 you were paying on it, I'm only going to charge you $1,500 this year.
It hasn't happened.
It doesn't happen.
No.
And so, but with a mortgage, it's a beautiful thing, because like I said, that's why it doesn't matter if the market does crash, because you're not going to sell your home. You got to live somewhere, and you might as well pay down your principal on somewhere that you're living, and also have a peace of mind of knowing that this is my home. And with the exception of 2008 and the 4-year run, 5-year run where we had to build back, our equity and where pricing was, let's not take 20% like we're seeing nationally right now with appreciation, because that's not sustainable. But let's say we get back to the national average of 6-7% a year when it comes to home appreciation. Let's even say it's 4%, okay? You buy a home, you spend $400,000 on it. Next year it's going to be $416,000. And then it's the compound effect, $416,000 at 4%, right? Then it's, so $416,000 at 4%, we're talking now the home's worth, call it close to $440,000. Now add another 4% of $440,000, right? Now all of a sudden the home's worth $465,000 in the following year. So your home continues to go up in value even at a low appreciation rate of 4%. But the better part of that is not only are you paying down your principal at the same time, you're also having a tax benefit for living in that home. And that's the thing that people don't understand, is there is a tax benefit. Your interest is deductible against your income. So there's another reason to buy. And so to me, as these rent prices continue to go up, my message comes to people that do rent to say, look, if you can buy, don't worry about, am I spending too much on this home? It doesn't matter. Worry about the fact that you can get a 3% 30-year fix for the rest of your life, where the payment never goes up, and you hedge yourself against inflation, and you never have to worry about rents continuing to go up year over year over year. Because that impact of throwing away that kind of money, take 5 years, $2,000 a month with, say, 10% increases in rents. All right, $24,000 the first year, okay? Next year, we're up 10%. So now it's, well, what is that? So 24, so that's now what, $27,000 the following year. 10% of that, now it's 30. The following year is 33, and the following year after that, is what, 3,900, 4,000? So in 5 years, think of that annualized, how much money you will spend in rent. It's an incredible amount of money. And that money could be dedicated towards your own home. There's just no reason for it. So the answer is, if you're an investor and you're going to flip a house, that's one thing. If you're going to buy a home and you're going to rent it out for a year and then sell it, that's another thing. You do got to look at pricing. You got to make better choices, better decisions, be more analytical about your purchase. But if you're buying a home for yourself and you're going to be there 7 to 10 years, it doesn't matter what you pay for the house. As long as you can afford it, of course. But it doesn't matter when you say, I'm spending $400,000 or $500,000, what's the market going to do? I don't want to lose money. You're not losing money because you're not selling it. You don't make your mortgage payment out to the price of your home. You make your mortgage payment out to what your mortgage is. And right now, that is at all-time lows. And that's why those that can buy need to buy. And there's never a bad time, and there's never a better time than now, because it only gets worse as years go on.